Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stanovac. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance. We got a great program coming up. Let's get a snapshot of the market, though, and just see how things are shaking out right now. A little bit of red across the screen. Bitcoin at 113,000, down about 1%. Solana down 4%, $205. Ether at 41.24, that's down 2.5%. Let's zoom out, though, on the month for some of the biggest cryptocurrencies by market cap. You can see a little bit of a divergence. The best performing cryptocurrency over the last month, Bitcoin, but just a little higher than flat. Flat was Solana, and we saw losses for Ethereum. We did have a number of firms like Galaxy Digital get involved in the first Solana digital asset treasury companies, the DATs. And look at that, they're soaring.
They are soaring. These are the month-to-date performances of those much-hyped DATs. And some winners here include 8, which is linked to OpenAI's Sam Altman and Dan Ives. Bitmine, which of course is tied to Wall Street analyst Tom Lee. This is his Ether treasury company. Ford Industry, which has a tie to Mike Novogratz. And Bit Digital, backed mainly by a mix of institutional and retail investors. Here are the decliners for the month in terms of DATs. You have Metaplanet and Kindly MD with ties to David Bailey. Strive, which is tied to Vivek Ramaswamy. He's a former Republican presidential candidate who's now running for governor of Ohio. And Alt 5 Sigma, with ties to World Liberty Financial, which, Tim, is backed by President Trump and his family.
So I guess the eyeball scanning one is the one that did really well with Dan Ives and Sam Altman.
There you go.
That's the one. Okay.
That's how it goes these days.
That is how it goes. Hey, I want to talk a little bit about what's happening with the SEC, because speaking of digital asset treasuries, the SEC suspended trading in QMMM Holdings after saying the digital media advertising firm stock may have been manipulated by touts on social media. Its stock surged 959% before the company said earlier this month that it was establishing a treasury that would initially reach $100 million and target Bitcoin, Ether, and Solana. Let's discuss with Bloomberg's Nicola White. What happened here, Nicola? What is the, I don't want to say allegation, but what are the questions around the social media posts here?
So the SEC said that this company shares, its stock price surged, and it surged on this really unusual activity that potentially was based on people touting the stock on social media. There is a lot of emphasis from the regulators right now, from both the SEC and FINRA, which regulates broker-dealers, about the potential for kind of scams coming through WhatsApp. Like if you get an unusual message through WhatsApp saying, do I have an investment for you? It might not be the best place to make an investment. And that's what the SEC's announcement yesterday said. It suspended the trading for 10 days in this firm. And yeah, they're not going to be able to trade for 10 days.
Yeah, any move like that, 1,000% or almost 1,000% inside 3 weeks certainly requires a closer look. I also want to talk with you a little bit, Nicola, about the SEC Chair Paul Atkins talking about how he needs to coordinate crypto rules, and that's the #1 job right now after his meeting with the CFTC. Talk a little bit about why they're now teaming up.
Right. So the U.S. is pretty unique in that it has 2 financial regulators over the market for securities and derivatives. It has the SEC and it has the Commodity Futures Trading Commission. Many other countries only have 1. And so a lot of banks and hedge funds are subject to basically 2 sets of rules, and sometimes they end up overlapping. So there's always been calls over the years for the 2 agencies to work together and try to find areas of common ground. But there's also been turf battles over the years, including in the area of crypto. And crypto is definitely having a moment here in DC, and the 2 agencies are really trying to do the best that they can to try to come up with rules, absent federal legislation, that things that they can kind of work on together to just get some kind of groundwork in place.
Yeah, make the rules of the road so that the operators know what they're dealing with here. Nicola, thank you so much. Nicola White joining us with the latest developments here on regulators and crypto. So for more on this topic, let's bring in Coinbase Chief Legal Officer Paul Grewal to discuss the regulatory environment. So Paul, tell us a little bit about how you view the coordination between the CFTC and the SEC in terms of figuring out crypto? Because up until now, as Nicola was reminding us, it's been a bit of a turf battle. Are they now completely on the same page?
Well, I think what we're seeing is a new era in the cooperation between the SEC and the CFTC. You know, the turf battle that Nicola referenced earlier wasn't just between the agencies themselves. Unfortunately, over the years, Congress, which has oversight authority with respect to each of these agencies, has also, I think, fought over who has the primary role in regulating crypto. Is it, for example, the Financial Services Committee? Is it the Ag Committee? Banking in the Senate and its Ag Committee? So these turf battles, I think, have unfortunately dominated, but we're now seeing real cooperation at the agency level, and I think a lot of the credit for that goes to SEC Chair Paul Atkins and Acting Chair Pham.
Is there a country that we can look to or that you look to right now that does this the right way, that does this really well, that the U.S. can model itself on?
Well, I think the U.S. has actually now become the model. For many years, under the previous administration, the SEC in particular was behind. You saw Europe and Asia race ahead in adopting sensible crypto rules and sensible crypto standards. But under the new administration, I think we're seeing real leadership from the SEC, not only from Chairman Atkins, but also from Commissioner Hester Peirce. And I think the U.S. is now once again serving as a model for the rest of the world that we can all be proud of.
So as the two agencies start to coordinate more and more and start to, work from the same rule book here, how does this fit in with the crypto market structure bill that's still working its way through Congress? There's still a lot of questions tied to that.
Well, the market structure bill is critical. The Congress made excellent progress early this year when it passed a stablecoin bill, but it's critical that Congress finish the job, and that's what the market structure bill will do. The House has already passed the Clarity Act, its version of this legislation, and now it's time for the Senate to do the same. In the meantime, the SEC is not wasting time and is racing ahead to implement standards and erect a framework for crypto regulation so that it's ready on day one once this legislation passes. And we think, again, that's a real credit to SEC Chairman Paul Atkins and his leadership and the attitude of the SEC that this is a market, this is an industry that has been long overlooked and needs to be addressed.
Have you spoken with Paul Atkins since he's become chair of the SEC?
I have. And what struck me most about Chairman Atkins is that he not only understands these issues at a technical level, but he appreciates the urgency with which the U.S. needs to act. I think Chairman Atkins understands, as the full SEC does, that if the U.S. allows other countries to continue to enjoy this advantage or lead, it really puts U.S. competitiveness at risk.
Have you seen either of these agencies in any way say no to anything the crypto industry has proposed?
Well, I think there are certainly important cases involving fraud and misconduct the SEC will continue to address. And I think even as recently as today, we've seen the SEC continue to make clear that it will not tolerate fraud or misconduct or abuse in this market any more than it would in any other. But at the same time, there is a level of cooperation and partnership from the SEC on writing the rules together with the industry and, frankly, critics of the industry, so we all understand what standards apply and we all understand what rules are going to be enforced if someone chooses to cross that line.
In your view, is there a role for consumer protections here? Is there a need for consumer protection, or does the market take care of that itself?
Consumer protections are critically important.
What consumer protections specifically?
Well, I think the most fundamental protection that consumers need to continue to enjoy with respect to crypto, as they do with any other asset class, is to understand what it is they're investing, what they're getting into when they choose to make an investment in this particular technology. Disclosures at the SEC have always been critically important for that understanding to take root, and we think that same model can apply with respect to crypto as it has successfully and effectively with many other asset classes.
Speaking of seeking disclosure, you've put in some Freedom of Information requests to the SEC. Talk a little bit about what you hope to get out of that.
Well, the SEC, unfortunately, under the prior administration was quite opaque in sharing with the public why it was targeting certain crypto assets over others and why it was targeting crypto as a whole while seemingly tolerating similar practices in other asset classes. Coinbase filed a FOIA lawsuit against the SEC to get at the deliberations behind the scenes to understand why the former chair, for example, was taking a certain view of certain assets. And unfortunately, what we came to learn through the release of an Inspector General's report and our own efforts was that many of those messages, many of those text records from Gary Gensler himself, as well as others, were destroyed. We think that's a real blight on the agency and its reputation. We think it's critically important for transparency, but also accountability, that we complete the record and that we get to the bottom of this. We're pleased that the federal district court in which we filed our lawsuit is taking an active interest in this, and we think we're going to see justice done in the end.
The text messages that you refer to are from a period of time that cover the collapse of FTX, the lawsuits against Binance and Coinbase as well. On the FTX meltdown, the crypto winter that was associated with that, how do you protect investors or ensure that people are protected if we did see some sort of other decline, widespread decline in crypto asset prices, and prevent another FTX from happening?
The single most important and effective thing Congress can do to protect investors from another FTX is to pass legislation. The clarity.
How does that protect them, though?
Well, because it provides real standards for example, defining which assets are subject to the jurisdiction of the SEC and the rules that would follow from that, and what disclosures would follow.
So are you saying that had those been in place prior to the launch and meltdown of FTX, that wouldn't have happened?
I am very confident that if Congress had enacted sensible legislation, such as the Clarity Act, as FTX could have been prevented.
Who should have oversight over the bad players? I mean, should it be the SEC? Should it be the CFTC? Does that need to be clearly delineated?
Well, I think each of these agencies has an important role to play because for now many decades, the U.S. has divided jurisdiction over financial services more generally between the two agencies. In each case, though, it's critically important that there not only be standards that are laid out and then applied fairly and equally across the industry, but that there also be resources dedicated to enforcing those standards. We, for one, believe that it's critically important that fraud and abuse and misconduct be addressed where it exists, in crypto and also across all financial services.
So now that you think we're in an environment that is much more favorable to cryptocurrency companies and to companies that are operating in the space, what is your attention turned to now that a lot of what you wanted to see accomplished has actually been accomplished? What do you prioritize? What's your next move?
Well, we are grateful for the progress we've made thus far, but there's a lot of work that remains. I would put at the very top of the list sensible tax policy and standards for crypto and digital assets more generally.
What does that look like?
Well, we need to see, again, rules enacted that consider, for example, whether unique features of blockchain networks and the underlying technology beneath crypto require a different approach to establishing, for example, capital gains treatment and capital requirements. Fortunately, the Senate is already moving to address this issue. As early as tomorrow, for example, we're going to be seeing a hearing in the Senate Finance Committee addressing crypto tax issues. Coinbase will be there testifying along with other witnesses. And we think that the Senate can address, or at least begin to address, those concerns, even as it finally passes the market structure bill that we all need.
Going back to what Tim had asked you earlier, is there a country or jurisdiction where that is clearly laid out and can serve as a model?
Well, certainly Europe has, I think, moved faster in enacting digital crypto standards. And I think in jurisdictions all over the world, we're seeing crypto tax issues finally receive their due. But again, I underscore the point that the United States has a real opportunity to lead here and serve as a model for other countries rather than simply looking to other countries for its inspiration.
Paul, thanks for coming by.
Thank you for having me.
Always good to see you. That's Coinbase Chief Legal Officer Paul Grewal joining us here on set at Bloomberg headquarters. Well, speaking of the SEC, last week on Bloomberg Crypto, we spoke with Galaxy Digital CEO Mike Novogratz about the Trump family's involvement in multiple crypto ventures as the SEC drills into the industry.
The one thing about this new SEC is they're all about disclosure. And, people, and it's a little bit of a buyer beware SEC. And I would guess if you read through most of the different protocols the Trump guys have participated in, it's everything they do is pretty well disclosed. And so I don't think there should be any mystery around, what they're doing. Listen, if they break the rule, if I break the rule, we should get in trouble.
All right, we just have some breaking news here. Pfizer is getting a 3-year grace period from pharma tariffs from the president. This is after the CEO of Pfizer, Albert Bourla, just spoke at the White House event. And of course, Pfizer has committed to onshore 100% of value of drug imports. We will continue to monitor these headlines here as the president hosts a news conference in the Oval Office. Tim?
But back to crypto, in another sign that times really are changing. Vanguard is considering crypto ETFs on its platform. Bloomberg's Isabel Lee reported on this. She joins us here on set. Isabel, Vanguard, I mean, people know Vanguard for like very simple index funds, like nothing fancy. That's what the company was founded on. Saved investors a lot of money. You can read Eric Balchunas' book all about it. But now they're going to allow crypto?
So this is why it's such a big thing, because it's not a yes yet, but it's not a no anymore. And for the longest time, they were like, no, we won't be adding it. Its former CEO, Tim Buckley, said we'll never add Bitcoin funds. Its late founder, Jack Bogle, has said to avoid Bitcoin like the plague. And now that they're considering it, it's already such a big deal because Vanguard is known to be one of the last holdouts. It's just an asset manager with $10 trillion in assets that they manage with 50 million investors. So really, Eric Balchunas, to your point, I did read his book, and he had a quote in the story saying that Vanguard people, they can hold boring vanilla funds, but they would also like some fun stuff like Bitcoin. And he told me, which didn't make it to the story, that Vanguard investors are smart. They can make the choice themselves.
So the story here is that it may allow trading of crypto ETFs on its platform, but that's not the same thing as Vanguard launching its own Bitcoin ETFs or crypto ETFs, right?
It's very different. I think that's like the other step. But for now, at least, if you're a Vanguard investor and you want to buy Bitcoin ETFs, you don't want to go to another platform. And nearly every major platform now offers Bitcoin ETFs. So I feel like this is a sign of times, a big shift, but still, we're not sure. But when we talked to Vanguard, they said they're listening to clients, they're talking about it. So again, they're opening the window by a little.
Yeah, I mean, to me, what it sounds like is they saw demand from clients.
Yes.
And they want to make sure that clients stay on their platform to do what they want.
Don't wander off the ecosystem, right?
Exactly.
Yes.
Is that a fair assessment?
Yes. Eric Balchunas, again, he was the one who I talked to for this story. He said that, if Bitcoin ETFs weren't as successful, we may not be seeing this. But it's so hard to ignore the astounding success. I mean, altogether, the cohort has around $142 billion in assets. 80 billion of those is from BlackRock. 20 billion alone came this year. So you don't even see the demand abating. And with the SEC now, you might see more cryptocurrency ETFs to come. And to close the door on that money-making big, it's just lavishing capital, investors lavishing capital into these ETFs is a big, maybe, mistake, according to some.
I wonder to how much of a role the CEO, Salim Ramji, plays here in Vanguard's not changing his mind, but being a little bit more open to the idea of crypto and blockchain.
Definitely big. I'm glad you brought that up because Salim Ramji, he's a BlackRock veteran. To many, he was one of the people in charge or led the charge for the IBIT to launch. So he has expressed openness with blockchain and Bitcoin, and he's the first outsider to ever become the CEO of Vanguard. So this is definitely, potentially, according to insiders, we don't have proof yet.
Is it a little risky? Because in just 20 seconds here, if for some reason we see a widespread decline in crypto asset prices, people could say, hey, why did you let us do this?
Could be, but that's the beauty of investing. You give people the choice to make that for themselves.
They need to own it. They need to own their decision.
Tim.
They need to own it. You can own it, and you can also read Isabel's reporting on the Bloomberg terminal and at Bloomberg.com. That is going to do it for Bloomberg Crypto. Join us again next week, same time, same place. This is Bloomberg.